It's Thursday, and it's also National Onion Ring Day. It's also National Kissing Day, so maybe celebrate the kissing before the onion rings. That's a free tip from your host, Andrew, who also happens to narrate Crypto Espresso, your teeny tiny daily shot of caffeinated crypto headlines. And let's just go. First up, Bitcoin has broken the $30,000 level for the first time since April, surging over 10% in the past 24 hours. The rally comes amid renewed interest from institutional investors and several traditional finance players pushing further into the crypto market. Following BlackRock, Invesco and WisdomTree have also filed for spot Bitcoin ETFs, while EDX Markets, a crypto exchange backed by Fidelity, Charles Schwab, and Citadel, launched this week. Deutsche Bank also announced that it had applied for a digital asset custody license in Germany. Despite the recent regulatory crackdown from the U.S. Securities and Exchange Commission and past rejections of spot ETF applications, the market is liking the chances of BlackRock succeeding given its status and track record with the SEC. Bitcoin is up over 80% since opening at $17,000 at the start of 2023, but is still well below its nice all-time high of $69,000, which was set back in November of 2021. WisdomTree and Invesco have filed applications for spot Bitcoin exchange-traded funds, or ETFs, in the US following BlackRock's move on June 15th. New York-based asset management firm WisdomTree has applied for a third time, requesting that the SEC allows WisdomTree to list its WisdomTree Bitcoin Trust on the CBOE BZX exchange under the ticker BTCW. The SEC previously rejected its application in December of 2021 and again in October of 2022, claiming concerns over fraud and market manipulation. Meanwhile, Invesco has reactivated its application for its Invesco Galaxy Bitcoin ETF. According to the filing, the spot Bitcoin ETF will make use of professional custodians and other service providers. One crucial distinction in the BlackRock filing is that it intends to enter into a surveillance sharing agreement with the Chicago Mercantile Exchange futures markets. Similarly, WisdomTree signaled it is open to signing a surveillance agreement with an operator of a US-based spot trading platform for Bitcoin. Fidelity Investments is also rumored to be considering its own spot Bitcoin ETF, but they've recently announced that they have nothing to announce. Federal Reserve Chair Jerome Powell has said that payment stablecoins in the US are a form of money and that the central bank should play a robust role in their regulation. Powell's comments at the House of Representatives Financial Services Committee's semi-annual hearing came in response to U.S. Representative Maxine Waters on a proposed stablecoin bill from the Republicans, which would create 58 different licenses with federal regulatory approval over only 2 of them. Powell responded, "We do see payment stablecoins as a form of money, and we believe that it would be appropriate to have quite a robust federal role in what happens in stablecoin going forward." Powell's position differs from that of Securities and Exchange Commission Chair Gary Gensler, who said that stablecoins may require registration and regulation and that all cryptocurrencies except for Bitcoin are securities. It also runs contrary to CFTC Chair Rustin Benham, who sees stablecoins as commodities. According to a court-appointed examiner, the closure of cryptocurrency exchange FTX will be very expensive by any measure, given that professional fees have already exceeded $200 million. By the end of January, lawyers and other professionals had already accrued close to 35,000 billable hours. 2% of the estate's assets and 10% of the reported cash had already been spent, while 46 of the 242 attorneys working on the case were paid more than $2,000 per hour. The largely unregulated financial system in which FTX operates and non-existence of even the most basic corporate governance in the Sam Bankman-Fried-led crypto exchange has been cited as a contributing factor to the high costs. FTX's new CEO, John Ray III, has been attempting to settle the exchange's affairs since it collapsed in November, and some of his filings hint at an attempt to reboot operations as FTX 2.0. And finally, MakerDAO, the DeFi protocol behind decentralized stablecoin DAI, has completed the acquisition of an additional $700 million worth of US Treasuries, bringing the total stablecoin reserves to $1.2 billion. The decision follows a proposal to increase the debt ceiling for MIP65 from $500 million to $1.25 billion to take advantage of the existing yield environment. This is expected to deliver an annualized yield of 4.5%. DAI currently has a total value locked, or TVL, of $8.4 billion, and short-term treasuries are 14.8% of its existing collateral. The onboarding of a new real-world asset vault by crypto asset manager BlockTower was just approved by the community, which could lead to a potential US Treasury purchase of up to $1.28 billion in the future. Voting members also supported withdrawing $390 million in Gemini dollars and $500 million in Paxos dollars from the reserve in order to invest in higher yielding assets. And enough talk of Gemini dollars and Paxos dollars, try this new currency, Andrew Bucks, which you can earn by liking this video, subscribing to our YouTube channel, and clicking on that little bell icon to get buzzed whenever a new Crypto Espresso video goes live. Andrew Bucks are not redeemable in any way, shape, or form. Thoughts on today's episode? Drop me a line in that comment section because I read those comments and they certainly keep me up at night. I don't even know what is going on in my life anymore. I'm just a wreck because of those comments. Questions about our headlines or crypto in general? Take that plunge and ask Alex in the description below. Alex is always a great resource for all things Web3 and the metaverse, and that about does it for today. As always, I've been your host, Andrew. These have been your headlines, and we'll see all of your beautiful shining faces tomorrow.